Lipper is a global database with over 265 collective investments covering mutual funds, ETFs, domestic pension and insurance products.
Fund Flows Chat Europe with
Detlef
and Tobias Hartmann, Q3 2019. Detlef, you just ran a new market report on the European fund industry. Which were the key findings in your study?
Well, Tobias, by looking on the assets under management, the participants of the European fund industry seem to be quite happy as the assets under management increased from 9.9 trillion to 11.8 trillion over the course of the first 9 months this year. But if you look on the details on these real steep increase, you see that the increase was mainly driven by the performance of the underlying markets, as the equity markets saw a very good performance over the course of the first 9 months, and so did also the bond markets, and therefore within the fund industry also the mixed assets. And these three in combination led to this high increase in assets under management, while the overall flows just contributed roughly 200 billion to this increase.
Detlef, you just mentioned that the performance of the underlying markets was the main driver behind the increase in assets under management. What are the main findings with regard to the fund flows?
I mean, if we look on the fund flows, it looks quite healthy for bond funds and also for mixed asset funds. We see inflows of 207.7 billion into bond funds and 26.3 billion into mixed asset funds. On the other hand side, we also see that European investors got a bit risk cautious despite the good performance of the equity market. And so we saw outflows 45.3 billion from equity funds and also 47 billion from alternative investment products. If we look on these numbers by product type, we see that ETFs contributed 46.4 billion to the flows in the bond funds. This means 161.3 billion were in mutual funds. And on the other end of the spectrum, we witness that we see outflows, overall outflows from equity funds, while equity ETFs had inflows of 14.1 billion.
Origin of the money. Detlef, where do the investors invest their money?
If you look on the chart of the best and worst selling fund classifications, you see that on the inflows that the European investors are striving for diversification by investing in equity global, bond global in euros, as well as bond emerging markets global in hard currencies. In addition to this, we also see inflows into money market euro and money market in British pound sterling, which might be related to the Brexit, and on the euro side, it might be related to the risk-off mode we saw earlier on the chart. When we're talking about the outflows, we see that the European investors are selling European equities as they may expect less in economic growth in Europe and may also expect a better growth perspective in other markets like the US, and also going from a single region investment over into a more diversified global investment.
Detlef, it seems global goes over regional. What happened in the European fund industry with regard to the promoter?
Tobias, when you look on the flows on promoter level, you see that BlackRock is the leading fund promoter in Europe, and you also see that the majority of these flows for BlackRock came in the ETF segment. This is one of the big advantages that BlackRock has, as they have both product lines. So they do active funds and they also do ETFs, and what you see here is just the trend into ETFs is also a trend towards the biggest promoters, which in this case is BlackRock. But even more interesting is this picture when you look at the UBS. UBS faced outflows from active funds, and all the inflows which brought BlackRock up to this table were into ETF. This means if you're an ETF promoter and you have an active business, you might participate from the active funds as well, but the main driver of your business can be the ETF part.
Thank you for elaborating this on the UBS case, which faced massive inflows in the ETF business. So my next question is about the European fund industry with regard to the promoter activity. What's up there?
Well, Tobias, in such an environment as we have it in at the moment, one would expect that we see an increasing number of funds because we've got inflows into mutual funds and we've got increasing assets under management. So the fund promoter should normally launch new products and even more products than they close. If you look on the chart here, you see that the number of fund launches actually is on a high level, but the number is lower than it was in Q2. And we see also an increase in fund liquidations, while the number of fund mergers have gone down. What does this mean? I mean, generally speaking, it means that the fund industry is not really taking the chance to launch new products, but they are looking to refurbish their product lines by closing old products. We will investigate this in a second, and launching new products which might be more suitable to the market. If we look on this activity with regards to the single asset classes, we see that we have the highest activity in the segment of equity funds, which is not unusual because equity funds is the largest segment in the European market. Gets even more interesting when we are investigating the underlying trends. It gets even more interesting when we are investigating the activity by asset type. And you see that mixed asset funds, even as they didn't have the highest inflows, have the highest activity with regards to new fund launches. This is due to the fact that European investors still looking after alternatives for the bond market, which are more or less all-weather funds, and they mainly find these products in the space of the mixed asset product. On the other hand side, we witnessed the highest number of closures and liquidations of mutual funds in the equity segment. Again, it's not unusual because the equity segment is the largest segment by products and by assets under management in Europe, but you really see that there's a trend to refurbish the product ranges from the promoters, which is also true for the bond segment, but not on an as high level as it is in the equity part.
Thank you very much for elaborating the current trends, Detlef.
Thank you for having me, Tobias.
Thank you very much for listening to our podcast. And the last words should be yours.
Yeah, thank you for having me and thank you for listening.
Lipper is a global database with over 265 collective investments covering mutual funds, ETFs, domestic pension and insurance products.